Good morning. Crop report just has come out. That supply and demand report and the production numbers. We're going to go over these real quickly and then look at the reaction of the market. Let's going straight to the USDA report as they describe it. They say the most significant revision to this month's U.S. cotton supply and demand estimate is a 500,000 bale increase for exports to 16 million bales due to above average late season shipments. U.S. ending stocks are now forecast at 4.2 million bales in the 2017-18 and 4.7 million bales in 2018-19 for a stocks-to-use ratio of 25%. The projected range of the marketing year average farm price is raised 5 cents at each end to 60 and 80 cents per pound. The 2018-19 world projections include lower production for China, Pakistan, Australia, offset in part by higher production for Brazil. World production is nearly 800,000 bales lower this month, and that's pretty much in line with what people thought. While the 2018-19 consumption is reduced by 85,000 bales, as a 225,000 bale reduction for South Korea is largely offset by increases for Uzbekistan and Vietnam. World beginning stocks for 2018-19 are unchanged from a month earlier, but ending stocks are 275,000 bales lower at 83 million bales. 2018-19 world ending stocks are projected at 5.2 million bales lower than a year earlier, but stocks outside of China are expected to rise for the third consecutive year. So what's the reaction? Well, the market before this report came out was up in December, up 108. Right now it's up 86. So the market had gotten pretty pumped up going into this report. Earlier in the day when we came in here, cotton in July was maybe up 30. So we've definitely ramped it up going into the report. It seems to be a little disappointed based on how high we were going into the report. Now it's backing off. The July cotton was up 58 on the day. Now it's up 44, so it's also backed off some. So let's take a look at grains, and I'll tell you, I'm just looking at the report here. It says USDA trimmed both 2017-18 old crop and 2018-19 new crop corn and soybeans ending stocks in its release of the June crop production and world agricultural supply and demand estimates for this month. New crop soybeans ending stocks in particular came in below pre-report analyst expectations at 385 million bushels. And old crop corn ending stocks also came in lower than expected at 2.1 billion bushels. That's down 80 million bushels. USDA actually increased the U.S. winter wheat production estimates above the average pre-report analyst projections. They expect growers to produce 1.198 billion bushels of winter wheat in 2018-19. That's up 1% from the May report, with an average yield of 48.4 bushels per acre. So let's look at the reaction. Soybeans were up 1.5 pennies in July before the report. Right now they're up 4 3/4. The November soybeans before the report were up 1.5. Right now they're up 4.5. So positive reaction in soybeans to this report, showing a reduction, more of a reduction in carry out than they thought. Same thing should hold true for corn. Corn's just before the report, old crop and new crop corn were up 4.5. Right now they are up 7 1/4. July corn at 374.5, up 7 1/4. December corn up 7 at 395 1/4. So both corn and beans like the report. Wheat just before the report, wheat was up 2 in July. Now the wheat's up 11 1/4 at 526.5. So this is pretty positive reaction across the board for soybeans, corn, and wheat. Cotton market just has been stalling out. Now cotton in December is up 59. So we've actually seen this market drop 60 points since the report came out 8.5 minutes ago. We'll keep an eye on that. But that's it for the report. Thanks for being with us for this monthly edition of our Ag Market Network Crop Report Review that is brought to you by FiberMax and Stoneville Seed. Thanks for being with us. We'll see you later. Thank you.